All right, I think if Bob Lindbergh could do a little presentation for us, we'd appreciate it.
Thank you. I'm Bob Lindbergh.
You guys have this sheet in the package?
Yes.
Formerly of L&R Benefits, now Arthur J. Gallagher and Company. Our office is still in Windsor, and I grew up here in Simsbury, and I still live in East Granby. They asked that we provide a brief overview of the self-funded health plan history, current situation, the environment that we're dealing with, and so I prepared an outline with some highlight notes. And as we go through this, if you have any questions, please feel free to ask. What we wanted to do in terms of the overview is just reaffirm for the board that the town's primary health insurance and dental insurance programs are actually self-funded plans administered by the town and the Board of Education, funded directly by the town and the Board of Education, using Cigna currently for the health insurance and MetLife and Cigna for the dental insurance as the plan administrators. The historical advantage of this platform for the town and the board, both its tax-paying citizens as well as the members covered under the program, is that being self-funded has resulted in a very cost-effective program, both in terms of the fixed costs that you avoid being fully insured and those due to the claims experience that the town and board have had over the past several years. In terms of the fixed costs, as an example, when you're fully insured, you pay the state of Connecticut a premium tax, and under the Affordable Care Act, there's an additional surcharge that fully insured plans would be paying. Collectively, they're nearly 4.5%. So by being, excuse me, self-funded, there's over $500,000 of fixed expenses that are being saved. In addition, the claims experience historically has been better than expected, as well as better than what your fully insured costs would be. And that's resulted in significant savings over the life of the full self-funded program. The town and the board together have been actively engaged in managing the program, both in terms of the fixed cost components, which represent only 7% of your total plan cost. Over 93 cents of every dollar goes to pay claims for participants. I think that's an important statistic to be aware of. That plan management includes not only the administration of the program, the reinsurance review of the program, but also collective bargaining between the town and the board and the respective employees. That encourages plan designs that are cost effective, as well as engaging the members in the review of the benefit program. During the past several years, actual claims have been less than expected, and the expected claim projections have been less than market averages. During the past several years, the annual renewal projection for the town and board together has been between 0 and 5%. During that same period of time, market averages have been more between 9 and 11%. We recognize that anything that results in a positive change in the health insurance costs is difficult because the baseline is large relative to the overall budget, but the town and the board have done a good job of managing the cost of the program against both market and, excuse me, local benchmarks. During 2014, the plan consolidated its administrator to Cigna for the health insurance program. We received some direct cost savings, which have been incorporated into the 2014-15 budget. In addition, there's some longer-term administrative and operational efficiencies we expect to see. We're also better positioned to engage the members in cost of care and condition management programs. And lastly, to address some of the issues that longer term we'll be dealing with under the Affordable Care Act, both in terms of compliance as well as expense management. The program is self-funded. It's the responsibility of the town and board to ensure that claims can be paid under the plan, and historically there has been significant savings. A key component of this, though, is that the plan be appropriately reserved in terms of the fund balance that's established. On the notes, we identified that the target for the medical program is a reserve balance. It's approximately 27% of paid claims. For the dental, it's 8%. Currently, we are fully funded, and there's actually a bit of a surplus, which can be used, excuse me, as part of the budget planning and OPEB planning as we look to 2015 and 16. And so that'll be part of the overall conversation around plan management as we move into the next year.
How much do you think we have as far as excess?
5.4.
Well,
that's not the excess.
Oh, I'm sorry. 5.4 less
versus about
reserve, about $2 million.
It's about $1 million in excess in terms of available, and we're reviewing. There's also a second tranche there, depending on claims experience.
That's up to 35.
Yeah. The other part of this is the annual review of the self-insured reinsurance, which is the stop-loss contract, the town and board maintain both a specific and aggregate stop-loss limit for protection against large claim events. The limits are reviewed on an annual basis as part of the budget and renewal process, and we do a market study in terms of competitive positioning every other year for the stop-loss. That's a key component because when you are self-funded, you want the protection against those large losses, especially in the current environment. Historically, the relationship between the town's large losses and its premium has been effective. It's something that is an ongoing review for all of our self-funded groups, and more so as we get into the Affordable Care Act and some of the downstream things there. Collective bargaining has focused...
Quick question.
Oh, I'm sorry. Yes.
On the stop loss, while you're on that, is that both an aggregate stop loss and individual catastrophic type of?
Yes, it is. There's a specific contract which is per claimant, and there's an aggregate umbrella as well.
What are the limits on that?
I'm sorry?
What are the limits on that? It's $250 for individual.
The individual is $250, and the aggregate is 125%. I'm sorry, I had to stop and think for a moment because we were going through the review for another client earlier today, and it just froze in my mind. But yes, it's maintained. Currently, that paper is with Cigna as the plan administrator. That was part of the consolidation review this year. It does not have to be. Previously, it was an independent contract. The plan management in terms of program administration, as I mentioned, the combined stop loss and administrative expenses are less than 7% of overall plan cost. So a significant portion is going to the payment of benefits. In addition, we are focused on the compliance requirements under the Affordable Care Act, and having a single vendor going forward is going to make that a more straightforward process for both the town and the board. And we think that that was a key part of the conversation, not just the financials, but the operating efficiencies. Collective bargaining, as I mentioned, is a key part of the plan management. There's also a high level of involvement with the the members. As part of the collective bargaining going into this contract year, the high deductible health plan was introduced, and during the first open enrollment, in which it was readily available, we have 18% of your total population engaged in that plan. That's encouraging for a number of reasons, including some of the wellness and preventive care initiatives that we can bring, some of the care management conversations, but also positions us better for conversations around the Cadillac tax under the Affordable Care Act. A big part of the prospective planning is not just your own results and your own programs, but where it stacks up against the Affordable Care Act as we go forward. There are both indirect and direct costs associated with ACA. Some of the direct costs are that there are new fees and taxes to be paid, reinsurance costs, which are incorporated into this year's budget cycle, the PCORI, or Patient-Centered Outcome Research Institute fee, fairly not a significantly large number, but another fee that's part of this process. As I mentioned, you have avoided the largest surcharge, which is a 2.5% premium tax, because the plan is self-funded, not fully insured.
Bob, do we have an idea on today's plan, when it fully is implemented in the Affordable Care Act, what would the dollar impact be per percent?
In terms of the fees, it's running about 0.5% to 1%, Peter, over the next 3 years. That fee, which is the reinsurance fee, is scheduled to transition out after 3 years. We're optimistic that it will, but I've seen these things get extended. In terms of claims themselves, we're estimating it's an additional 1 to 1.5% in your claim to reflect all the things that have to be changed. And then the big question downstream will be the shared responsibility component, which is the payer claim mandates, and currently both the board and town are well positioned around that, so we're expecting that we're not going to trigger much, if any, of those surcharges. But the excise tax is the big one out in 2018. If nothing were to change and average increases were to take place over the next 4 years to get to 2018, we're looking at several $100,000 of potential tax. Having said that, with the recent changes through collective bargaining and some of the other things that are in play, I think the town and board are going to be well positioned to minimize, if not extend, the time horizon before that tax becomes a real factor. One of the other things that makes this so difficult to plan from this side as well as from your side is that a lot of things could happen to the structure of the excise tax between now and 2018.
So is that the magic year, 2018, the budget year?
Yeah.
So we don't...
It would be the 17-18. It would be the second half of the 17-18 fiscal year.
So next year we're going into the 15-16, and 16-17 we're all right, then 17-18?
Yes.
So 3 years from now, we're going to have to be ready for that.
We are working to be ready for it now, Peter, but in terms of the impact, big changes potentially could take place at that time to mitigate. It'll be part of the collective bargaining process as well as the financial planning process. we've got 2 elections between now and then. We've got a lot of things that may or may not happen. The biggest issue is that this Cadillac tax, or the excise tax, is a large portion of what funds the Affordable Care Act in the out years. And if they decide to change or eliminate or modify the tax, those funds will need to come from somewhere else. It's our opinion that that'll still come from plan sponsors in some fashion. So planning for this is critical. As we get closer, hopefully there'll be more clarity. Some of the changes are best to take now. Some you don't need to actually act on until you're closer and have a better sense as to what's going on. But the 17-18, second half of that fiscal year is when this will first be applicable.
With the Cadillac, these plans, or maybe not the high deductible, but some of these plans fall into the Cadillac category?
They do. When the Affordable Care Act was actually implemented, a lot of the conversation was around the nature of the plan, high-end benefits afforded to corporate executives and that kind of thing. That's where the phrase came from. The actual HHS guidelines, it's a straight calculation of the cost of your plan, regardless of the benefit structure, against this benchmark that they've established in advance. If your plan costs more than the benchmark, there's a 40% excise tax that's applied to that. And so what's in your plan or not in your plan is no longer really an issue, other than to the extent it drives the premium cost or the premium equivalent. One of the big issues from a national planning perspective is that there is no geographic delineation in that threshold. It's a uniform national value. So if you're here in the Northeast, if you're in the Midwest, if you're in the Southeast, you're all looking at the same dollar value. We think that will change. Can't guarantee it, but we think that will change because that's a relatively straightforward, easy fix for them to address. So it will defer, I think, the issue, but it's not going to eliminate it unless they do something significantly different to the legislation.
Well, I saw some data recently suggesting that the rural hospitals care, for those care being provided out in rural areas tends to be double that of you see in urban areas. So
there's a lot of things that are in play. The affordable or the accountable care organizations, which are hospital-based provider practices. There was an article in the Wall Street Journal yesterday as to whether or not that's really working, and if it does, there's opportunities, and if it doesn't, it's one more layer of cost. So there's a lot of things that are in flux, for better or worse right now, and it's very difficult to project out into 18 and know what they're going to do. The history of the implementation of the legislation has been, I don't want to say haphazard, but somewhat uneven in terms of the things that get extended or not extended. And the implications here are significant from a management perspective.
Do we know our results from this past fiscal year yet?
Looks like we're about $200,000 unfavorable. So I would expect the reserves to go from 5.6 to 5.4.
It was, Joe's right, it's about a 2%, less than a 2% variance, and it's the first in 5 years where we've actually been on the high side. It's actually still well within the normal framework of plus or minus around the target estimate, quite honestly, for the year. But it's the first time where we've had it on the unfavorable side. The fund balance is there to protect against that operational result. And it also, it provides you, as a community and as a board, an opportunity, as we plan for some of these things, to have a little flexibility, because a lot of our clients do not have that wherewithal and are dealing with this out of their operating budgets rather than a combination of operations and planning.
Bob, did we get hit on frequency or severity?
Severity. There were a few. There were a few very large claims that did reach the stop loss limit in the 13-14 year. There were also a number. We call them mid-range, but they're between $50,000 and $150,000. There were more of those this year compared to the prior 24 months. It doesn't look like any of those are extended into this year based on what we've seen during the first 90 days of the 14-15 fiscal year. But we were on a $12 million projection, we were over by $160,000.
Anything here with a long tail on it?
I'm sorry?
Anything with a long tail?
Not that we're aware of, Nick, no.
And so I think you said before we were about $1 million in excess reserves?
He's got percentages here. You're supposed to keep about 27%.
27% is the target that we look at for the IBNR and the volatility reserve, and that would generate, as Joe mentioned, a little over $3 million based on the most recent cycle. And there's some other things related to ACA that we had suggested be IC benchmark footnoted. And beyond that, though, there appears to be...
So if we have like 5.5 million minus 3 million, we have about 2.5 million of could be determined excess reserves.
Okay.
other than a few of those minor things that were benchmarked for ACA, but yeah.
Because one of our objectives is to try to find out where we have excess reserves, what's a reasonable reserve, we don't want to under-reserve the town, but then how do we utilize those reserves to give some relief to the taxpayers? So either through premium reduction or the way we budget, we have to figure out a way to use that. That's legally possible.
Yes.
You know, we just don't want to be reckless with it, so I'd recommend that we look into that and try to come up with some way going into this budget season, how to use, first of all, determine what the excess reserves are, what people feel comfortable with, and then how do we legally use them, whether, I guess we have to go through town attorney to find out.
There are identified appropriate uses for the prosecutor. Part of the budget process, as long as it's within the benefit structure, would be an option. Looking to contribute towards the OPEB GASB requirement would be another appropriate option. What is difficult is if you try to take money out of the benefit structure itself and move into other parts of general operations, there would be steps you would need to take before you thought about that.
Yeah, but we could skinny down a little bit on the current, the future contributions to get there, right?
As long as it's within the benefit structure, that's right. I'm just talking about if you started to buy police cars or computers with it, that would be a different issue because you moved it out into general government at that point.
Okay.
But that is part of the planning conversation already. We've begun the initial budget review for 2015-16. Market trend is still in an 8, 9, 10% range, which is a challenge, but we've done better than that historically. We're hoping to see that again.
One of the things Bob hasn't really talked about is some of the steps that we've taken to try and get, encourage our employees to do more helpful things and to, reduce claims and so forth. So, I mean, there's a lot of stuff in the plan that is, working towards reducing the future claim levels, which I think is an important thing that we do, so.
Yeah, the preventive wellness, the care management programs are very important to that. The high deductible health plan design gives you a lot of flexibility in addressing those issues, and we think are a key part. One last piece on the second page of the outline, there was one note and I just wanted to touch on it. For those of your retirees who are Medicare eligible, and you are still providing coverage, whether it's on the town or the board side, those plans are fully insured. They are not part of the self-funded plan. A reason for that is twofold. Really, it's a risk management conversation when people are, Medicare eligible, and the other is from an OPEB planning perspective. When you can fully insure, you eliminate a lot of the implicit subsidy that comes with OPEB and GASB calculations for non-Medicare retirees. And so I did want to highlight that from a cost planning and a plan management perspective, that the Medicare eligible retirees have been transferred to a fully insured arrangement. And that's been positive as well.
So will that change our OPEB calculation?
They've been there for a little while, so it's already built into the structure for the last at least 2 cycles on OPEB GASB, but it's a key consideration. One of the reasons they're there is for that.
Well, thank you.
Thank you very much.
Any more questions?
No.
I appreciate you coming, Bob. And
Glad to be here. Glad to be able to report on the program. It's in good stead. It's been managed well, and it's actively engaged looking forward, which I wish I could say for more of our situations. But no, it's the team has done a good job, both at the town and the board.
Just so the other board members are aware, I sit on the insurance committee that meets with Bob on a quarterly basis, and so we get a fair amount of information and updates and so forth on these programs, as well as our liability programs at that time. So
who else is on that committee? Just Bert?
we got Paul Mickelson,
Ed Sparkowski.
Ed Sparkowski,
Chris Peterson.
Chris Peterson, yeah.
Got a new member appointed.
Madeline's on it, isn't she? Or was? Ellen Gilkey used to be on the committee. I'm not sure she's still on.
Well, we appreciate all the work that they've done, and obviously they've done a good job, so keep finding us some more reserves. We appreciate it.
You want more money?
Thank you.
Thanks, Bob.
Now, we amended just for this presentation?
I think we moved the minutes to where, the end? That's what you...
No, we just moved this up.
Okay.
This up.
You
Okay,
wanna
so
do
now,
minutes?
why don't we do the minutes, and then we'll get to the Simsbury Bank. So can I have a motion for approve the minutes? of
So
September
moved.
16th?
Second.
Second? People have any corrections to the minutes?
I have one, just, can I have a minute to find them? My one change is paragraph 6.
Right.
Page 4.
Four.
4.
Paragraph
It's the
6.
end of paragraph 6.
Point 6?
The paragraph that I'm referring to starts with Mr. Mason made a motion to approve. And can I just modify the reason that I gave? It says Ms. Pettigene voted against the motion and stated she is not against doing this request, however, she is against it showing up. And can I modify it to say outside the annual budgeting process that is approved at referendum by the voters?
I circled that also. Post-plan was not real clear.
Right.
Okay.
I think you said outside the annual budget process of the meeting.
So outside the annual budgeting process that is approved at referendum by the voters.
The dissenting opinion is heard.
Yes.
Any other corrections or changes?
Yes, let's see.
As I recall, you were not able to talk at the last meeting. So
Right.
It's nice to have your voice back.
Yeah, she wasn't
Yeah,
very,
now I can't walk,
I think I
so.
can tell
she
you.
wasn't very verbal.
It's just an ever-rotating problem, you know, isn't it? Oh, under number 5, Finance Director's Report, the paragraph under the dot points, I think that first sentence just needs some help. So the second line starts with the word perform. I would say perform a review of the accounts of the cap. Number 5. Under the 6 dot points, that first paragraph starts Mr. Mancini, the second line starts perform. Mr. Mancini wants to have Bloom Shapiro
okay, yep.
perform.
Yep.
It now says a more due diligence on the accounting side. I would get rid of that part and say perform a review of the accounts of the capital projects, if that,
Just say review of the accounting, and just get rid
of
of
the
side.
accounting. Okay,
Accounting of
that's right.
capital projects, 'cause
It's a little off.
It was just a little unclear.
Take out the word side too, Peter.
yeah, the word side out of there, because just the accounting, the accounting wasn't right.
And let's see, on the next page, 3rd paragraph, well, this is really minor. Mr. Leclerc is requesting you need to put the word that, the board consider. And then at the very bottom of the page, the very last sentence should start with the word the. The total request for funding is $74,000 to be taken out of reserves, and scratch out the word to, transferred, add ED, back into the budget. And that's it.
Any other corrections? All those in favor?
Aye.
Aye. Any opposed? Minutes passed as correct. Okay, presentation from Simsbury Bank. Mr. Reich, you have the...
Thank you very much, Mr. Chairman, and my name is Martin Geitz. I'm president of Simsbury Bank. I want to thank the board very much for this opportunity to provide you with an update on the relationship that the bank has had with the town since you awarded us the business several years ago. I'm accompanied today by my colleagues. Jocelyn Mitchell is the senior vice president for the bank and is our chief retail banking officer, and Ken Sklodowski is our market manager for Simsbury, and he will be making the presentation. So again, thank you very much for this opportunity.
Good evening. I'm Ken Sklodowski. I'm the market manager for Simsbury Bank in the Simsbury office, and I'm the relationship lead for the Town of Simsbury relationship. I'm thrilled to have been chosen as the successor to Terry Bolton to manage this market and the Town of Simsbury relationship. I've been a bank manager and relationship manager for 15 years. 7 of those years I spent with Simsbury Bank in the Bloomfield office. So I just moved over in July of this year over to here in Simsbury. And finally, I have managed several municipal relationships. So I do have experience managing relationships with municipalities. And I just want to say thank you for the opportunity to speak before you this evening. Okay, tonight we will begin by discussing how Simsbury Bank is servicing your banking needs. Next, I will explain what makes Simsbury Bank unique. Then we will discuss our ties to the Simsbury community and our philosophy of reinvesting in our communities through leadership, volunteerism, and financial support. I'll do a brief wrap-up, and we'll finish with an opportunity to present one or two questions. I know we're tight on time this evening. Okay, in 2009, the town selected Simsbury Bank as its depository institution. This is a brief snapshot of how Simsbury Bank has been able to save the taxpayers of Simsbury valuable dollars since that change. I use the figures from our response to your RFP. Unfortunately, only 2 months of the Bank of America figures were available to use, so I took the same 2 months from this year and what Simsbury Bank charged in fees for those 2 months. You can see there's a savings of about $14,500. Now these figures are before earnings credit. I wasn't sure if the Bank of America figures were after or before earnings credit, so I played it safe. You are not actually seeing any fees in your accounts at Simsbury Bank at this time. Based on the 2-month figure, I calculated out that annualized savings of $87,420. And the total over the 5-year relationship is over $437,000 in saved fees to the bank. Not too far forward. Okay. An added value Simsbury Bank has been able to provide the town is interest earnings on balances in a money market savings account. As the relationship began, we offered the town a special money market rate as promised in our RFP response. You'll see there's a spike in 2011, and that's not due to an interest rate uptick. That's actually due to an uptick in your balances. The balances in 2010 were roughly, on average for the year, $4.4 million. In 2011, those balances were $18.678 million in average. So the total interest earned by you in the 5-year relationship thus far has been almost $281,000. Now, I am providing you with an interest breakdown. I'll be giving that to you at the end. There'll be a little binder that has some addendums in it, so it'll be the first addendum in that binder. Okay. As a community bank, Simsbury Bank makes an effort to support the community in any way it can. So last year, Simsbury Bank took advantage of an opportunity to purchase Town of Simsbury bonds. We made 2 purchases totaling $1.1 million. You can see the dates we purchased them, the interest rates that they're earning, and when they're being called. This is obviously direct investment in the town. Simsbury Bank offers a wide breadth of depository investment options. Currently, you're using our ACH services for both credits and debits, our lockbox services, wires, you're writing checks. You're using our investment services indirectly through fiduciary investment advisors and our online banking services. Our SBT investment services are offered through LPL Financial and its affiliates. And as you see, Positive Pay will be available beginning March of next year. We are capable of handling municipal relationships and all the complexities that come along with them. We have more than 15 years experience managing municipal relationships here at Simsbury Bank. These next few slides are a few statistics related to how we are serving you. We'll take a quick look at the global figures. The detail activity breakdown is included in the binder I'll give you at the end of the presentation. This checks process number has been slowly declining, as you can see. Now, the 2014 figures are year to date, so there's going to be more added to that, but you can see they are on the decline. Conversely, you will see that the ACH, or automatic clearinghouse credits and debits, have been increasing. We've seen this trend across the industry as businesses and individuals move from paper checks to electronic processing. Electronic processing gives less opportunity for fraud. In the next slide, you'll see that as the ACH credit activity is also increasing. And on deposits processed, what you see here is actually the numbers of deposits, but not the numbers of deposited items. Each deposit could easily have a dozen or more items in them, so you could probably increase that by a factor of 10 to get a feel for how many actual items we're processing through the account. Honest checks can be items cashed with tellers, so people bring a Town of Simsbury check to the teller, we cash it, or if somebody takes that and deposits it into a Simsbury account, they have an account with us and deposit it. A value we provide to you that is unique in the banking industry is we actually pick up the phone on return checks and call you. If it's a $1,000 check or more, which is pretty much most of them, we pick up the phone and call you and notify you. And this is particularly helpful when it's tax collection time. Okay. Almost all the wire transfer activity is incoming wire transfer payments to you. There's very few wires going out. And the average balances referenced in this slide are checking average balances. You know, we talked about the money market savings account earlier. Those are separate balances. We have a dedicated and experienced team to serve you. Our goal is to provide you with unmatched service and attention to your needs. We value our relationship with you and apply our community banking tradition of local, friendly, and personalized service delivery to your banking relationship. Simsbury Bank is a homegrown bank formed in the early 1990s during a difficult commercial real estate market that caused several banks to fail. At the time, there were few local places small business owners could go to borrow that had local decision makers and a friendly way of dealing with its customers. The larger institutions were pulling back their lending, even to stable, credit-worthy businesses, causing frustration to owners and impacting their ability to do business. As a result, local business owners came together to form Simsbury Bank with the mindset of providing local decision-making and great customer service to Simsbury and the surrounding communities. We were the first bank charter in 6 years, opening our doors in 1995. During the recent financial crisis beginning in 2007, the larger institutions made decisions about the Connecticut market and again decided to pull back their lending commitments. Simsbury Bank was able to be a resource to this community during that crisis and actually increased our lending as the larger institutions pulled back, fulfilling our goal to be a local and independent bank with local decision making. We maintain a mindset of providing sound advice, education, and supporting the communities we serve through volunteerism and financial support. We are a small customer service oriented bank. So not only are we able to create or customize products and services easily, we welcome the opportunity to service our customers in new ways. There are currently about 94 households taking advantage of the unique tax savings program we have here in Simsbury. An example of adjusting our procedures is our recent adjustment to your needs regarding the ACH services contract. We changed our requirements and added an extra step of processing notifications per Joe's request. We have experience lending to municipalities. We have financed property purchases, vehicle purchases, property repairs or upgrades, equipment purchases, as well as underwriting bonds. Your relationship with Simsbury Bank makes us a stronger bank. We have been a leader in the Simsbury market for years. We have been a depository leader since 2010. Out of 6 institutions, we've been ranked first. We reinvest those deposit dollars locally. We have been the top residential mortgage lending institution in Simsbury since 2010, and that's by rank of units and dollars. So numbers of loans and dollars of loans, ranked first. That's not easy to do, because if you look at the report, there's roughly 120 to 200 lenders that lend in this market every year. Again, we look to provide lending solutions to local and creditworthy small business owners. This slide illustrates our commitment to reinvest locally by supporting organizations through sponsorships and financial support. The dollars listed on this graph were supportive of organizations that directly benefit the Simsbury community. We have shown a gradual increase in our contributions and sponsorships over the years. Details on who these local organizations are and how much we gave them will be provided to you at the end in the binder. We have sponsored or donated over $400,000 since 2008. Our financial support is impactful and beneficial to the people of Simsbury, as this slide demonstrates. At Simsbury Bank, we foster a culture of donating our personal time and money to local organizations by supporting our employees when they want to volunteer or donate. The statistics provided were for last year, and is a good representation of what we do on a regular basis, year in and year out. Our matching program allows our employees to make even more impactful donation to the community cause of their choice. And that's with about 90 or so employees, 1,455 non-bank sponsored hours of volunteer time. When we outgrew our space at 760 Hot Meadow Street, we made sure we kept our administrative offices located within the town of Simsbury so we could remain to support the town through employee and bank use of local businesses and direct payments to the town in the form of taxes paid. This slide is an illustration of how Simsbury Bank fosters a culture of community leadership. We encourage and support our employees to take leadership positions in local organizations. Many of our employees and directors hold board and or officer positions at these local organizations. In closing, I want to briefly summarize some of the takeaways. We have the capability of managing your banking relationship. We are dedicated to providing you with unmatched customer service. We proactively work to support the Simsbury community in many ways because our success is dependent on the vitality of Simsbury. We care about our relationship with you, and we want to help you reach your financial goals. Thank you for providing us with the opportunity to speak with you today. And if you have one or two quick questions, be happy to entertain them.
Just positive pay, you're gonna be having positive pay?
Yes.
I've been
About March 1st.
pushing for positive pay for a couple of years. Yeah, because it's been a concern of ours to make sure that we get that.
I was asked, in 2011, was that the first time that you had a relationship with the town of Simsbury in terms of providing their banking services?
No, the relationship began in December 2009.
Oh, 2009.
Things
okay.
started being funded about the beginning of 2010.
Okay.
And as the balances went up, that's where you started seeing some of those interest payments go up. And then interest rates dropped back down at the end of 2011. The whole interest rate market dropped.
Right. But 2009, okay.
Yeah.
It's amazing.
Yeah, it goes by fast, doesn't it?
But it's just amazing how much money in fees were paid prior to that time.
Yeah.
By the bank. It just
Yeah.
blows your mind. So.
And we're just thrilled to be the banking
Yeah.
partner.
On the interest rate front, by the way, I mentioned to Peter earlier, but we had heard from both Joe and Mary that we should sharpen our pencil in terms of the money market rate that we offer. And as of last week, we increased that to 15 basis points from 10. So hopefully to be responsive.
I would just like to note that I personally really appreciate how much the bank really does invest in the town. I sit on a lot of volunteer and nonprofit boards. I know my colleagues here do as well, and I see a lot of people from Simsbury Bank. And Terry Bolton will be big shoes for you to fill
I
because
know.
she's like the Energizer Bunny out
I
there
know.
on all these different Rotary and elsewhere.
Yeah.
So, but I do appreciate how much the bank really makes a point of investing in the community. There are a lot of businesses that don't do that sort of thing. They come to make money and they aren't really part of the community. And even though Martin doesn't live here in Simsbury, one would think he does for all of the hours that he puts in on many, many
Yes.
different organizations. So
Yes.
it is not unnoticed. Do
Right.
you
I
live
do-
in Simsbury?
I do not.
You better move here.
I don't
Right
live
after
in
Martin
Bluefield either.
does.
So I knew this question would come up. I live east of the river in a
another
development that was built by my mother and named after my grandfather. When I moved in, sadly, my grandfather passed away, but I have two young children, a 10 and 12-year-old in the school system there, and my wife is a small business owner. She owns a home daycare, so we're really tied to that community.
Excuses,
But it's worth the
excuses.
drive. It's a beautiful drive.
Well, we
Because
appreciate,
Joe's going to be moving here any minute now. too.
Yeah,
we
right.
appreciate Simsbury Bank coming and informing us about all they do.
great.
And, as you know, we're looking at this budget season to try to find ways to minimize the taxes of our taxpayers, and so we're looking at all angles. And so we've tasked our finance director with helping us out, and we're reviewing the way we spend money and the way we earn money and everything else. So many things we need help in, and so we appreciate what you do for us and any way you can help us.
I think we can find some competitive solutions to help you.
Well, thank you very much.
Thank you.
Great job, thank you.
I appreciate it.
Joe, you're up.
Almost like official.
Try it. We have to. I think so.
It's amazing how much we're paying in fees doing the car. What's going on before 2009? It was What's going on before 2009? Yeah, what is this? Oh, this is Rebecca pens.
No, I need a fine one.
Did you hand your report out, Joe?
I did, everyone should have a copy of it.
As long as the town isn't paying for those fine point pens, we're fine.
So, yeah, in all interesting analytics, I've never actually seen a percentage be greater than 100%, but it's actually based on original plan. So any additions to the grand list that occur, construction projects that are done, taxes are collected, so you're 100.1%, 0.01% of what you expect to be after. If you don't have it,
There, I got two. Maybe I stole yours.
why'd you steal next?
I didn't do it on purpose. Here. You stole mine? Maybe.
Do you have it, Jeff?
Yeah, I got it.
Just gave it today.
So yes, you guys have actually collected greater than 100%, which is mathematically not popular. No, it's just because of, it's versus original plan, so it's adds, deletes. You guys had more ads and you collected money for it. But I did sit down with the tax collector for a while on that because I philosophically could not understand it.
But cash to cash, with 200,000 up from last year,
Correct.
forget the percentages.
Correct.
That's real money.
Absolutely.
And we billed people more than we planned we were going to bill them, basically.
Oh, that's a very negative way to look at it.
No, but more people came on to be
Yes.
taxed.
But I'm correct,
Graciously put more property on.
but Colleen has got a really sizable number of delinquency notices out pending, hasn't she?
She does. So this is reflective of current year collections, but yes. I mean,
So there's a fair amount of potential still sitting up there as well.
absolutely. I would say your prior year collections for fiscal 14 were a little bit, I don't want to call them lackluster because they were still over and above what you expected to collect. But there's some opportunity in that bucket for this fiscal year, especially if we get more aggressive. You know, being from West Haven, we did aggressive things, like booting cars and foreclosing a house.
Plus we get interest, so
It's not bad, 18% a year, 1.5% a month, just for sending out.
Credit cards, it's just terrible.
it's great.
That's governed by
It's meant to
the
be punitive. Right?
Simsbury Farm Subcommittee. So we finally did have a meeting, came up with a proposal. We've kind of identified about $190,000 worth of room, or worth of clawback, I'll call it. So what we had proposed to them was about a $90,000 shift from the first selectman's budget over to Simsbury Farms, $50,000 worth of rate increases, and cost reduction to $50,000. So what are the next steps? We're waiting on feedback from Park and Recreation. After that, hopefully we'll have something finalized where everyone agrees with what the next steps will be, with whatever measures we take. So it should be an interesting conversation during the budget. For fiscal 14, the fund was right around $190,000 unfavorable. So I think we've pretty well sized the elephant early on in the year. Number didn't change much since April. All right, estimated reserves. Now I think we've pushed through the majority of our journal entries. On the revenue side, we're favorable about $2.2 million. Expenses, if I include some of the transfers and items that we did, like negotiated salaries, the snow, and all the overruns we had a drag in expenses of about $500,000. So you guys ended up about $1.7 million. So if we had
$1.7 million will be increased to reserves before
you talked about the items that were approved during the budgeting process and subsequent to that. So during the budgeting process, you guys approved $955,000 worth of capital projects that will absolutely be reserved.
Sorry. This is for which year here?
Fiscal year 14, I apologize. Still talking about last year.
We're getting close to books.
Yeah.
accountants always deal in history, we're historians. No. Yes.
Oh, absolutely. The only world you know is behind you.
Sorry.
And then, subsequent to the budget, we approved 3 other items, 2 being general fund items. That was the open space fund, which was $49,000, and then the $70,000 from the last meeting, which was the emergency generator, so about $119,000. So net, I expect you guys are favorable about $617,000. If you do not approve anything from here on out, that is the amount that I expect the general fund to be favorable. Which leads me to the next page. The next page is...
Go back. Too fast for me.
One thing, we had a reserve in here, and I forgot to ask you this before, for that settlement.
Correct. I have removed it. I mean, I can put it back in if we want. We don't have to reserve for it because...
Do we have to write a check?
No.
I'm sorry, which settlement are you talking about?
No, if we were writing a check, I would have reserved for it. So it was just a decrease on the collections for this year. So you took it right out of this.
There was a settlement, a court settlement?
Yeah, 217, was that the number?
Yeah. It was in his last time projection, he backed out $217,000 for that settlement. He wasn't sure whether we were gonna write a check or not.
Yeah, which we did not write a check. It just came out of the...
But going forward, that's been reduced. It's not gonna impact 15, is it?
Yes. That's correct.
Well, it would impact it to the extent there'd be less revenue.
Yes,
Correct.
but we're not writing a check, right? We're just reduced their assessment, so they just reduced what they paid us.
Correct. Gave them retroactive credit.
Joe, can I get you to just back up and walk through this more slowly? And I apologize. Obviously, you guys all get it, but I missed it.
No problem.
You're thinking we ended the year $1.7 million favorable, but then the next sentence is only $600,000 favorable. So what happened there?
What I tried to break it down was into two components. One being the operations.
Yeah.
So your operations led to favorability of $1.7 million.
And this is the entire town or just the non-education town?
Board of Education's in there as well. They're projected at relatively flat. So what I tried to give it in 2 components. How did you guys operate? And now, how did you use the available funds that were out there? So the available funds were what was approved during the budgeting process, and the reason I spiked that out differently is because it's treated differently as when you talk about transfers, and I'll get to that on the next page. And then I tried to break apart the projects that were approved after the budgeting process, the open space fund, the emergency generator, then down below, I spiked it out, the Henry James locker room. Although that was proposed during the budget, it was approved subsequent to the budget, and we chose to take that out of the capital fund balance, so that's $280,000.
Okay.
Honestly, you guys had a very good year. Obviously, some of it was due to Farrell's Farm, your tax collections, I mean, you're very high.
Building permits were up higher and things are starting to happen.
$200,000 higher than prior year. And even now, they look pretty good versus how they were a year prior. So for fiscal 15, we're starting off good.
So Joe, the one thing I think I've brought up continually is we know we're anticipating a shortfall for the farms this year too, and it would be possible to take that out of this same
It may
excess.
very well. And we can probably talk about doing that at the next meeting.
And how much is that?
You're talking about doing it now as opposed to next
here.
meeting?
190,000 is where I expect it to fall.
The only reason that I would want to do it now, Nick, is so that we don't use this 617 for something else when we know we're going to have a hole somewhere. That would be my only rationale.
When we get to the next page, you'll see we don't have a whole lot of room left.
Right.
So, does everyone understand operationally where we stand?
It's definitely higher than the last time you showed us the number.
Correct. And the removal of the reserve and then just additional favorability on items that.
But Joe, just stop at the bottom of that page with the 617. That would put our reserves at what level, percentage-wise, or dollar and percentage-wise?
I didn't do the math, I apologize, 12, 2?
It's 3/4%, isn't it,
So
about?
we're on top of, we were
12.
coming in around 12,
Yeah,
right?
yeah.
So 12.75, 12.6.
Hence, that's why we're doing the reserve policy, what to do
Well,
with excess.
that was just my point. We're now into that realm where we need to start talking about what are we gonna do with it, right?
That's why we already did the 955, instead of bonding, we just paid cash for
Yeah.
stuff, because,
We anticipated what the policy would say
yes.
when we wrote it.
It's prescient.
So
Some of us
we
did.
should know our own minds.
We just put down what we were always thinking, we just put it on paper. That's what we're basically trying to do with this policy. There is a method to the madness.
So the next section's on transfers. Now, in your charter, you have 3 types of transfers that you can do. Each one is capped at 1%. Now, so in any given year, you can appropriate an additional 3% of your budget. And part A is for any project that there is any sort of state or federal grant reimbursement. So, for example, the Henry James project that we approved, that would fall in that category. B is any appropriation that deals with real estate. And C is kind of the catch-all. That's everything else. That's where the majority of our items fall into.
Real estate meaning buying land or acquiring,
Yes.
Correct. So, for example,
not
the
building
item that's-
buildings.
Yeah, it's anything to do with real estate, to be honest with you.
Building a new high school, does that come under there too? Not that we need a new high school, but
Perish the thought.
It says for the purchase, any appropriation supplemental to those in the annual budget which is for a real estate purchase, whether or not an appropriation for such purchase may also be made pursuant to subsection A provided. So it says purchase.
but we're talking about operating and not capital. Is that correct?
We just purchase real estate.
No, it's just purchase of real estate. Whether it comes out of the operating or capital budget doesn't really matter. All right, so what I tried to do was give you essentially how much have you spent out of the available funds so far. So under section A, you guys have appropriated $280,000 out of a possible $949,000. Section B, 0. Section C, $665,000. And if anyone needs the 665 explained, I'd be more than happy to sit down and show you how I got spent on it.
It's a lot of little pieces.
Yep. That's basically the 119 on the previous page, plus the 3% 344, the 102, the 15, the 235, less the 150. Check is about 60,000.
We'll trust your math.
Excel never lies.
Joe, let's say we were going to transfer money into a special revenue fund. Where would that come out of?
Part C.
We would appropriate from the general fund,
FEC?
or whatever fund is available. So that would be section C. Unless it was for the purchase of a piece of property.
Gotcha.
Or if there was a grant associated with it. I guess you could make the case in all three. So, for example, if you had a grant that was available for purchase.
No, but let's say, we're going to talk about this other our capital non-recurring. Let's say we want to transfer to capital non-recurring. Does that come out of this? That's a transfer.
Sounds like that would be C.
So you're not actually doing a supplemental appropriation.
Right, we're not appropriating, we're just
You're doing a
transferring.
Transfer of balance. I don't believe that would fall into this.
Yeah, I don't think so.
Not until you create the appropriation, whatever.
Yep. Okay, good.
Everyone all set there?
Yes.
All right, capital projects and the audit.
So Joe, can I just, so there's 284 left for general stuff, which is mostly what comes in front of us. And we already know if we wanted to use it for the farms overage, that's 190,
Correct.
which puts us all the way down to 110 left.
Which I think will be okay.
Barb, some of the thought on the farms was, you know, they were trying to solve some of their problem and they didn't.
Right.
So the question is, and this is, by us transferring, it makes it easy for them to solve their problem. We just solved it by transferring the balance. That's what we're trying to get away from. So we're trying to figure out if we should just, eventually we have to make it right.
Right.
The question is, when do we do it?
Right.
By giving them, by taking 90, putting 90 into the first selectman's budget and asking them to find another $100,000, 50 on the revenue side and 50 on the expense side. We're trying to put some pressure on them to solve their own problem and
Well,
become more.
which is good, but then how do the selectmen find the 90?
Well, I'm not.
They're good.
They need to find it. Yes.
Right. So I just want to leave that one out there. It's an issue till it's resolved.
But Barb, it puts some pressure on them as well.
Well, it does.
There's no question about it.
Well, they came up with a $1.7 million surplus last year, so there's places for them to find it, obviously, right?
Well, not necessarily in the budget. I mean, the surplus
It's
is
'cause of
partly because of the tax
collections.
collection rate.
Oh, okay.
So you started at 2.2. They were actually in the hole last year, if you look at this.
Oh, okay.
$500,000.
The town's not gonna have the windfall it had this past year, because we changed the collection rate, and we had some extra land sales, and so we don't expect what we had this year ever again.
You guys are relatively tight, but it's still going.
Well, we could, I mean, as the way up, as you come out of a recession, good things happen on the revenue
Good
side,
things happen, there's no question about it.
so. All right, so the audit's done.
No, the audit is not done, but, so Bloom will actually be out all next week. First week of November, I'm expecting the results of that capital audit that I had them do. That'll be incorporated into this audit. We're still looking end of November. It's shaping up nicely. There's still a little bit of legwork to do, actually. There's a lot of legwork to do, but we're in a good place. I'm definitely further ahead than I was when I was in West Haven. I'm pretty happy with where it is. Spend and save policy. I believe I gave you guys a rough draft. If not, let me know. It's called Capital Non-Recurring Budget Savings.
This is what we talked about when Bert came in with that, if we spend so much, here's what he could save in his budget. So we said we'd get back to you with some way to do this, create a fund, so this is the...
I added one more approval process and I got rid of energy.
And Peter, this fund would have to be appropriated, though,
Well, you'd have to be funded.
right?
and then it'd have to be appropriated through the normal budget process. Read through the rules, we just set up the rules, you know, we talked about, we basically went off the other guideline of a capital non-recurring fund.
Yeah, exactly. So what differs from this, from the capital non-recurring, is we're talking about a 10-year payback as opposed to a 5-year payback. In order for this fund, we set up, or basically to have an expenditure out of it, it'd have to follow the same process that capital non-recurring does. You know, Board of Education, it would have to go to the Board of Education, and the Board of Selectmen, and ultimately the Board of Finance. It would follow a very similar train of thought. The part of the caveat being for it to be approved, it would have to show a positive return on investment of less than 10 years, right? Because otherwise, why do it? There's no return on investment.
Basically, it's a way to give them incentive to get some savings in their budget. We pay for it, they pay some back, instead of 20%, which might not be a big enough incentive, 10%. So the town's recouping so we can keep it going on a revolving basis. It goes through the budget process. We have to jumpstart it with some money over there, and if we have, you know, fund balances at the end of the year, we determine extra, then you probably want to put some money over there so they can use it, provided there's a plan. But the question is, who decides what goes through? There's some operating procedures. There'll be some other, right now we kind of have an understanding of the dollar amount for selectmen and Board of Ed. We haven't gotten down to that kind of detail. You know, who can use it, but I say whoever gets the best savings. You know, let's say we wanted to put 300 in to jumpstart it. We could put 300 in. It wouldn't hit one of those sections. We have 600 some odd thousand to do. We now just transfer it over to this fund. Somebody goes through the budget process, says, I want to spend, in Burke's case, $239,000, and I'm going to save $122 in my budget. So I would make sure that there is going to be some savings before we do it, and we measure it. Show the taxpayers we're spending money to save money. That's why I called it budget savings fund. Real simple. So it's clear. It's different than the regular capital non-recurring. It's not to keep equipment. It's to whatever you can do for savings. We're not going to restrict it to energy savings. I think in the definition, we're just what can get us savings. You can come up with a way to spend money. It might be you buy a new system, computer system, to do a process different. I don't know. There's a lot of creative ways you could come up with something.
My biggest problem with this kind of process, if you want to call it that, is that it gets really fuzzy to measure quantitatively what the savings are sometimes.
Especially as you go further out.
Yeah.
Especially for 10 years.
Yeah.
That's a long
3 years.
The 10 years is what I'm reacting to out of the whole thing, not the concept, but that's a long time.
Well,
For project,
the intention there was to give them some wiggle room so that they could, you know, look at things that would produce a positive return on investment. I understand your point. I mean, logically, you'd expect to see, you know, stuff coming back to us quicker than that.
well, the paybacks usually are under 5.
Yes.
to
Essentially an
really-
interest-free loan for 10 years with the collateral being the savings, so to speak.
Well, and there's nothing to say, though, that we have to approve everything that comes to us with a 10-year payback period. I mean,
Right. It's not going to just, I mean, you don't, if somebody
but I'd
comes
be more
back to you
comfortable with a
and
short one.
says we're going to save 50%, well, what in my mind, they're going to budget, let's say they're going to budget 1.5%, well, if they're all of a sudden going to save half a point in their budget, now their budget's reduced down to 1. And they're going to know, they're going to live with that, so now that's a new base. So they got to feel comfortable, the budgeting authorities, to know that they're now been permanently reduced by this savings. So they got to feel comfortable that the savings are going to stay with them. Otherwise, they won't propose it. Because otherwise, they're going to pay back in their budget and pay back this fund and not have the savings.
It's a good concept.
Barb, in all honesty, I don't think you guys are going to see any projects for the foreseeable future that have a 7 to 10 year payback period. What I asked Tom Roy to do is basically go take a look at all the available projects that he wants to do that's out there, right? Categorize them by number of years it takes for the return on investment and the dollar amount that's associated with it. Let's see what we get back. We can always...
What we should do is just think about it. Here's something just to look at. It's not something you decide in 5 minutes. Think about it over the next month. Jot your thoughts, put them down, concepts, questions?
Can I just ask one more theoretical one? So if a project has a 3-year payback, and just to walk us through it, but they get to pay it back over 10 years? Doesn't that mean that, and we only take their budget down by the amount they save in the 3, doesn't that mean we're really making their budget go up for a 10-year period?
No.
So if it's a 3-year payback.
I understand your point.
Let's do.
You have to make them pay it back in the real payback period.
Well, I think so.
They don't get any savings if we make them pay it
Let's say
back.
it's a $300,000 project, just for convenience sake. If
Uh-huh.
you're saying a 3-year payback period. That means that you're gonna realize savings of $100,000 per year. Now, on the expenditure side, you're talking about $300,000 spread out over 10 years, so $30,000 a year.
Right.
So for the first 3 years, they're gonna realize net savings of $70,000. Actually, no, yeah, $70,000.
No, for 10 years, they'll only get $70,000.
About 3 years.
Actually, for all 10, they'll end up with $70,000.
Right.
Oh, yes, I apologize.
I don't understand that point.
I mean, the point is to get relief for the taxpayers day
Oh,
one.
I see. No, it's going to go 70, and then after the payback,
No,
it goes.
it doesn't ever get paid back
Oh, you're
because
right,
they're
it's
not
10
really
years.
paying it back.
30 a year,
I got it,
but
got
They're getting that $100,000 of favorability every year.
Forever.
So-
Right, but they're only seeing 70 of it till they finish paying it back.
Correct.
So it's 10 years before we really get that 100 savings.
And,
Versus-
but
5
I would
years.
say
Versus not getting
if
it
it
all.
can be, if the
The-
savings can be realized in 3 years, it has to be paid back in 3 years.
Well, no, that's not the intention of this
But
fund.
Barbara, theoretically, let's not debate the math. I'll show you an example. We'll do examples.
Okay, I got
But, I mean, you could just say, fine, take 300,000, spend it, don't pay it back. Then you get the immediate savings. But now you don't have any future funding to keep doing it.
So would we want to say maybe like double the period? I mean, so if it's a 3-year payback, maybe we go with 6 or something along those lines rather, because you want to have the incentive, but the policy statement says 10 years, and as a policy matter, we
What
want
I'd-
to.
But what I'd like to do is everyone to put their thoughts down. We got other business we have to
Okay.
press. This is a
Let's come back to
concept.
this next month.
Put them down, list your concerns, talk about the concept. Maybe we need to do an example so you digest it, understand it,
Yep.
make recommendations.
Actually, examples would be really helpful if you
Yeah.
can bring us some
Understood.
actual projects and show us why you wouldn't pay them back in the time period when you could. I mean, I don't get why you wouldn't.
If you don't get the
encourage
savings,
them
then you're
to
gonna need
Honestly,
budget savings.
to make it lowers your budget quicker. You're realizing savings much faster if you extend the payment.
Here's what happens right now, Linda. Right now, vendors will do this for you, and you get zero savings. They'll come in and do a project, and then for 2 years or 3 years, you pay them back, you get no savings. And at the end of year 3, you get the full savings.
Right. Oh, so you want to, okay.
I want to get the savings now. I don't want to wait.
And in this case, you guys are actually the bank.
We're playing the
Right.
bank.
Right,
That's all
right,
we're
right.
doing.
We're the bank.
Right.
I agree with the concept. It's just a time frame. Is 10 years the right?
And we can look at it. We also need to understand the list of projects that come. I gotta imagine there's a whole litany of them that have less than 5-year payback periods and probably in the millions of dollars, so.
All the 10 years does is preclude us, somebody coming in saying, well, this project, will benefit us for 50 years and, or some ridiculous number like that, and we decide to, go ahead and do something. I mean, it just puts some outside limits on it.
It's a policy, it's not an absolute.
Yeah.
Again, it just sets a framework for how we expect this to work. And just,
Because your comment a few minutes ago that most of these things will probably have a payback of 3 to 5 years is probably very correct.
I would hope
they
so.
will, yeah.
I mean, to make them really worthwhile, they need to have that kind of time frame.
But they could still do those projects with vendor financing right now and not realize it.
Right.
A good long-range planning is we want $400,000 of savings in these types of projects.
Right.
The town's going to jumpstart with some of our money, then the vendor money, use that, start investing now, and in 3 years, we'll see the benefit.
Right.
So that's what you really want to do, long-range planning. You want to use a combination, because the town can't fund it all, but we can fund a piece of it. So that's what I think we're trying to do.
Okay.
Would you be here at 7:30? Did we be here at 7:30
I don't know,
tonight?
maybe we don't.
Yes, there is a 7:30.
Okay.
So special revenue funds, guys, I've been getting a lot of requests on these, initially some conversations at the Board of Selectmen meeting this past week before. So what I'm gonna be doing is basically pulling every single special revenue fund that you guys have, giving you a description of what it is, what the purpose of it is, the balances that are in there, and the fiscal oversight. We're not necessarily consistent in the fiscal oversight. Some stuff goes before you guys, some stuff does not. But I want to bring that first to the Board of Selectmen, and then bring it to you guys in December. So,
Joe,
that's something we should look at yearly, because you guys are the only body that can set them up. Go ahead, Nick.
about 4 or 5 years ago, we had sort of this is before Kevin left, we had a sort of a concerted effort to try and get rid of some of all these excess funds that were floating out there, some of which hadn't had any activity for a long time. I think we've been guilty of setting up more recently.
Municipalities do this instinctively. There's always an expansion and contraction. 5 to 7 years is pretty relative.
Not 10?
Quiet, stop it.
My ass. All right, that's all I have.
I have one request, and I don't know if you can comply. I know you're trying to get these done at the last minute, so it's the most up-to-date information, but I'm a person who
Would you like it in the
can't
package?
read it and listen to you and take notes and think about it all. If I could get it a day before,
No problem.
then
I talked to
I
Barbara
wouldn't
about
ask so
that
many
before.
stupid questions.
No, there's no stupid questions.
Bert? What is that?
We have two items that you're looking for an update on, I guess. In terms of the first one, the Facilities and Enrollment Task Force had a meeting on October 6th. You've got a copy in your packets of the Board of Ed exhibit from the presentation at its meeting of the 14th. And
It's just the one-pager?
it is just that one pager dated the 14th of October.
Yeah.
There was a more detailed PowerPoint that we can certainly forward to anyone who would like it. And what we were able to do is both focus on the modular removal plan update as well as doing the numerical feasibility exercise, looking at the 18-19 school year, which is that year that the elementary projections appear to flatten out, and we're able to look at the potential for any of the for 4 of our 5 schools closing from a mathematical point of view, given that our largest building, Squadron Line, would be the one that would not make sense. So we went through that methodology and that exercise based on our projections from NESDEC on a school-by-school basis, and ultimately the task force talked about the fact that it was not, while it was technically feasible in only one school, or smallest school, that it was not advisable at this time to move forward and consider that type of closure for 18-19. And yet this is something that should be done on an annual basis, is what the task force felt, to update with the annual enrollment projections. As you know, we recently received our 10-1 enrollment report, and we felt like we've established a methodology that would work well. And the next meeting, which I anticipate would be in the next several months, would be to review the modular plan. Phase 3 is the one phase that we have not undertaken yet. And that's sort of a high-level overview. I'm happy to try to answer any questions.
Have you distributed any of the enrollment figures from October 1st yet?
The board had a report on that at its last meeting. So if you'd like to have that forwarded, I'm happy to forward that exhibit to you. The projected decrease, we were within 1. It was actually, we had one more student. So the decrease of 10-1 to 10-1 was 76 students down. We had projected it would go down 77. And that's K-12.
Good projections.
This year they looked good. One of the real positives out of the detail of the report was that for the last several years we had not seen the summer in migration trend that used to be consistent, where we would have more, there's people that leave the district, people that move to the district, and that was flat for the last several years. This past summer, that bumped up significantly, and that started to return to what we were more used to seeing. So that's one of the themes, and when you see that, you'll be able to dig into that a bit.
They're coming in at the front end, in the kindergarten grades, or?
It was. I would say it was spread. I think it was spread throughout. It wasn't just at one location. So that was the first topic. The second topic, in terms of the statute on unexpended education funds, section 10-248A. That's something that Peter forwarded to Joe and myself a number of months ago. I know Joe has some experience with it in West Haven. It certainly sounds like a positive idea to me. I don't have the detailed understanding of it.
So this worked very successfully for us in West Haven. What it does is it encourages the Board of Education to essentially underspend their budget. As with most government appropriations, what you see is there seems to be a year-end push to try and use any expended or unexpended funds. The reason being, showing favorability, you look like you're overtaxing your residents. This just gives them a mechanism to actually preserve funds from one year to the next. It's not a multi-year rolling fund. I mean, you save it from one year, you have to expend it next year. But we had some success with it.
Did it build over time so that it ended up to be?
But no, but it takes pressure off their next year's budget.
Correct.
So in other words, if all of a sudden they have a $200,000 in savings, then they have to use it in a year, but it can take pressure off their next year's budget. And what it is it's, in the accounting world, we call it a continued appropriation. In other words, instead of closing it out in the fund balance, you leave it open, and it's at their discretion to spend. I believe that's how statute works.
Absolutely at their discretion.
So it's in their authority, but the theory is that they don't turn back that much now, but it gives them an incentive to save, to then take pressure off their budgets. Because now if they save, it goes back in the general fund.
So two questions. There's no paper on this, right?
They also have an incentive to spend everything that's been budgeted.
And is this something that you're proposing only for the Board of Ed, or would this also be something that you'd propose for the Board of Selectmen?
I don't think there's anything in the
Statutes for the Board of
statute
Selectmen.
for the Board of Selectmen, yeah.
So it's only in the statutes for the Board of Ed?
Yes.
Correct.
Yeah, it's statute 10-248A, I believe it was passed in 11?
10.
10 or 11?
Correct. 11. 10. It was passed in 10, effective for 11.
You probably passed it.
Yeah, we enacted pretty quickly.
Yeah, this is the statute. So you should take a look at it. I know, did you pass it out, Joe?
I did not.
You should pass out so people can take a look at the statute, and it's just something to think about. But if we set, the Board of Finance has to allow them to do this. So that's why I just bring it up. So we want to think about allowing them before the budget cycle to do that. It's something to think about over the next few months. So it's just for our...
So historically, could we just get some data? Have they ever turned back anything to the general fund?
Oh, yeah.
Yeah.
Quite regularly.
It's not a large sum.
But one year, I know you made an extra payment to your pension. Didn't you do a voluntary contribution?
Mm-hmm.
I think they made an extra contribution, so there's...
Yeah, but in my experience on this board in the last 12 years or so, generally the Board of Ed has always come back with monies that haven't been spent. Typically very close, but you know.
But if we do this, this will now go into this fund, so they'll have their own appropriation. It will not go back to general fund as surplus. It will stay committed to them.
I like the idea. I like the idea of incentivizing
So
behavior.
Is it there for like a year?
they have to spend it in a year, otherwise it will go back, I believe.
Right.
So now we have to see how other towns worked, how it works. We should do some research, but I think it's something we should look at. Our board has to give them the authority to do that. They just cannot do this on their own.
So let me ask, I asked before, can it grow? But what I meant by that is the first year they save $100,000 and they spend that $100,000, but they save $110,000 because they really didn't need that 100. They really now
they can roll that forward.
Right. So now they're rolling 110. Does it, when they start to do this, does it just grow in size of how much they save every year?
Can't exceed 1%.
Yeah, so what you have is you have this fund that let's say, it's capped at 1%. So it's just around.
Oh, there's a cap on it, okay.
It's capped at, so 1%, so upwards of like.
You should hand out the policy
Yeah.
for everyone. We have to
I'll make
move on.
copies.
Okay,
of it.
sorry.
Something so you guys-
State
Can I
statute caps
just,
it though.
yeah, make a comment before we leave the Board of Ed entirely? I would just want to go back to Facilities Enrollment Task Force, and we can talk about this other topic more later, but I just want to express, Burke, I was a little sort of stunned, to be honest, at the summarily dismissed idea of any reconfiguration or change whatsoever in school facilities. I guess my gut reaction is, if you've got a declining enrollment and there's space being freed up in the schools, even if you don't close a school, I want to know that there's a plan to sort of preserve the space in the schools that's being emptied, so that one of these days, if demographics reverse, which eventually they will, that those spaces have not been sort of sucked up for other uses. I mean, I sort of, that expression that work expands to fill the time allotted to it. Well, living expands to fill the space allotted to it. And so if you empty out a few classrooms, believe me, people will be saying, you know what, we really need a storage room for art supplies, and we really need, and before you know it, those rooms will be used, and then when demographics go up, you're going to come back to us and say, well, we need to build more classrooms.
That's a very good point.
You know what I'm saying? I mean, if you're not going to close a school, at a minimum, you need a preservation plan to preserve capacity, so it doesn't get sucked up for non-student classroom kinds of activities.
I'm not sure if the intent of that term reconfiguration in one of those bullets was what I thought I heard you just talking about. I mean, in terms of the task force had previously looked at what if the middle school had the capability of adding another grade, for example. Just looking at whether that was a mathematical possibility. That was also revised with this most recent conversation. So I certainly understand that we don't want to just fill the schools. That's why we're taking the modular spaces off.
Sure.
And so I certainly agree that we should be careful that we're using all spaces well.
Right.
But what these, what the feasibility showed was contrary to what I think some people might have assumed, which was, well, based on the decline, we could certainly close any number of schools. In fact, no, we could just barely close our smallest school in theory at this time based on the enrollment. But we have to check it on an annual basis.
Okay. Move on to the next item, appropriation for land purchase. Joe, are you going to lead us in that, or?
I can.
Do we have a memo? Do we have a memo here? Is this
Yes.
the?
About old one old Bridge Road?
Yep.
Purchase the one?
Alrighty, so you guys are, I'm guessing, already aware that the town Board of Selectmen is recommending the purchase of 1 Old Bridge Road in Simsbury. After the last scheduled meeting, which was September 22nd, they voted in favor of appropriating $150,000 for the purchase of the property and $50,000 for ancillary closing costs, remediation of the property, et cetera, et cetera. This has been referred to the Planning Commission. They have not ruled on it yet. I believe they are doing so Monday. It's hopeful that they're going to speak out in support of it. You guys know the piece of property, right? This is going to be a passive recreational area. What's it going to look like in a year? I honestly don't know. I mean, they won't know until they get in there, until they come up with plans. The reason for the urgency around this is the seller would like to close by October, or supposedly they walk.
Walk where?
Yeah.
But it's a good piece of property. right on the Flower Bridge, right on the water, has access to two main water, side river and then the main river in Farmington. The house is in need of some remediation, which is probably why we got it for well under asking price. And these are just the costs for the beginning phases of it. And this is not, I don't believe that this will be the end of it. I expect to see something, should you guys purchase it, there should be something in next year's budget to cover any future costs of this.
So this is right behind the bank building?
No,
it's
it's
right
Betty
on the
Hudson's
river.
house on
So-
one.
Right next to the bridge.
Do you know where the flop?
Next to the bridge.
Flower Bridge.
But does the bank property go up,
It's
extend up
close.
to that?
The bank property almost, well, not, is it the bank or Ensign Bickford's?
Ensign Bigford, I think, has that right.
Oh, Ensign
Ensign
Bickford has right away? Okay, because I just didn't know whether the next acquisition request might be that building as well. I think it's still in the market, right?
Look, the upshot of this is that if the town purchases it, they're likely to they're gonna tear it down and make it into some kind of recreational.
I don't know that they'll tear it down, but they'll do something with it.
Well, so here's my concern. One, can we do this justice with the next meeting standing outside at our door that needs to start in the conversation
But
tonight?
they started,
They start at 7:30 and we're already in their time.
oh,
So,
we need a longer time slot.
About 2 minutes.
We
Well,
get this other thing to vote on, too.
I think I'd really like to talk to this group about this because I'm concerned that, one, it's off cycle. Two, our cycle would get it in front of a town meeting for, a town hearing, not a meeting, but a town referendum hearing with our normal process in March, April of next year. I don't know that it isn't more appropriate to put it in front and get public hearing and public feedback on whether or not we should be spending this. And second, same thing as that what happened to us at Ethel Walker, we should be understanding the full cost of what we're agreeing to here. This is just the tip of the iceberg, because we don't know what the ultimate use is. If the building stays up, we're going to own another building, we're going to have to maintain another building. If the building gets taken down, there's all the costs associated with that. And then we just heard we need more people now to manage the open space, because we have more open space. So what's the long-term plan and cost to the town, to say nothing about the lost tax revenue of buying a residential property and taking it offline? So with those considerations, I feel like trying to rush to a vote tonight
Well,
feels like too much. And
I mean, just go over the history. I mean, when did we discuss this first?
I don't think we have.
we never have.
We never have.
Finance is not.
No.
Never been in front of us.
The Board of Selectmen's had public audience and all, I get that, and I guess this is below the amount that will be needed for approval at referenda, but I guess I would like more information on this in terms of, like, as Barbara said, kind of the grand plan. I just like to better understand it. And we've got the group outside waiting, and I don't know, are we gonna defer all the other items for action?
Let's talk about this item first, and we'll worry about the other items.
Well, if we have other business we need to complete, I think that's relevant. I'm not sure, do we have any, I mean, what were all the arguments made in favor? I apologize, I didn't get to the Board of Selectmen meeting. I've only read the newspaper articles.
Honestly, for the Board of Selectmen, there wasn't tremendous amount of arguments. I believe it was a unanimous vote.
It was.
Planning has not voted against it.
Planning hasn't seen it yet.
Tabled it, the meeting Monday.
Well, as far as our board, what's the pleasure? I mean, does somebody want to make a motion so we can formally discuss it, like we've done?
Oh, I'll move, so move.
Well, we can discuss it without a motion.
Does
What's-
somebody want to make a motion?
Oh, okay, we can discuss it without, then let's discuss it without.
Yeah, we don't have to put, the question is, do we want to table this till our next meeting and ask for additional information?
Well, I wish we had more time. I mean, we're out of time, but I think it is a discussion that's going to take more than 60
But we're
seconds.
not out of time. If we can talk about some of the other things we talk about, we'll talk about this too. Yeah, wait.
So we'll just hold those people?
We'll hold them up.
Okay.
'Cause we start our meeting late, so we'll keep going.
I also would like to learn more about the long-term plan and the long-term costs. I do think there's tremendous potential here to do good work with buying this property. I mean, the Flower Bridge is a big tourist attraction. You know, if we can put something there like a dock that the public can use to get in and out of the river, maybe use the building for storage of, to rent to people for storage of their kayaks, or to have a vendor there who rents kayaks or canoes, that kind of thing. I think that would bring good economic impact to the town. But I don't necessarily think we should make that decision without any inkling of what the expenditures are going to be in order to get there, or what the long-term plans are, because I haven't heard. I mean, I've heard everything from we'll tear the building down to we won't tear the building down, we'll do something with it. And there are issues around, if you do tear it down, you basically won't be, it won't be easy to build something else because it's in the floodplain, and there are, flood insurance rules against rebuilding in that area. So, I mean, I think it would be good to have a better sense of what's going to happen there.
I love the idea of
it's a
having
one-time
rental.
opportunity I hate us to lose. But I don't think it's going to go away, because it's not like there's a lot of people clamoring to buy a house in a floodplain.
Okay. Nick, do you have any thoughts?
I'm the treasurer of the Flower Bridge, and since we're right next door to this thing, I quite honestly not sure I should take much of a position on it. The Flower Bridge last night had their meeting, and they were they wanted to express to the Board of Selectmen, Planning Commission, and the Board of Finance that they think the town should buy the property and develop the property for recreational use.
It's a good idea.
I'm not really terribly concerned about the dollar amounts here. I'd agree with the others who I don't think we know enough at this point in terms of a long-range plan and so forth. I'd like to see where the Planning Commission comes out with it, quite frankly.
I love the idea from an economic development perspective of having like canoe rental there and generating not
Jeff,
only.
We're just trying to take a temperature of the board. What's your thoughts as far as where you think we ought to go with this?
Well, I've already stated my thoughts, because I'd like more information before I.
Okay, that's what I'm, okay.
So
I
a
sense
motion to
we have a
table it
motion
for.
to table?
Yes.
Entertain a motion to table, that sounds reasonable?
And I don't want to give people the impression that we're not favorably inclined toward it, because I am, but I still think we would like to see a bit more of a plan than what we've seen, a little more detail.
I'll make a motion to table it.
Second.
Any other discussion? All those in favor?
Aye.
So we table it. Any opposed? Abstention? All right.
So just so we might also want to recommend that the Economic Development Commission take a look at this, because there may be an opportunity to leverage that land for.
Yeah, or at least have the Board of Selectmen come back with some kind of a
Cost, the true cost.
Yeah.
So you want the EDC to get involved too?
I think
Well,
they ought
that
to take
might
a look
slow
at
it
it,
down a bit
and
further,
that's a consultative board of the Board of Selectmen, and I think it's an important parcel, as Linda said, for the economic development
Well, it's
of downtown.
Ferg Jansen said to me last night that when the Planning Commission looks at this next week, their decision will probably be based on whether it fits into the long-term plan, the Planning Commission's plan of economic development and so forth, which is in place and basically is their Bible. So I'd like to see what they come back with.
Yeah, okay.
All right, we have to move on. Do we have to do the sewer budget cleanup this meeting?
Well, I kind of need your okay to acknowledge it as a Scribner's error. Last year, it looked like when we loaded the budget for the sewer commission, there's Avon and Granby have a portion of debt that we would basically pay for them, and then they reimburse us for it. When you guys approved the budget, it was approved netted out. I need to gross it up. So you guys acknowledge that it's a Scribner's error. Essentially, you guys intended to have it reflected in the budget. It was just presented wrong.
I'll move it.
Second.
Any questions? All those in favor?
Aye.
Perfect.
Okay. The other items, in essence of
Let's
time.
vote on them. We don't,
So-
do we need any discussion?
So I can be
We've been
really
through it so
quick.
many
You've got a
times.
new cleaned up version, and I'll talk really fast. The only changes.
Taking the investment policy or reserve?
General fund policy first. The only changes are in 1.0 policy statement, I flipped 2 and 3 just in order, not in language. And the reason I did was the prioritization, their purposes are in that order. And in section 4.0 under guidelines, it used to be that the Board of Finance had to prepare and submit a plan, and I changed it to be the finance director is the one who's going to prepare and submit the plan to us.
I will facilitate it, I guess.
Right.
Exactly as I said.
And then the last thing is 5.0 investment policy adoption. That paragraph we had put on the other policy, but not this policy, and I thought if it's in one place, it should be in both. So I added it into this section, which basically says it gets it previously said an annual review, and I changed it to be biannual, because it seems like looking at our policies every 2 years ought to suit us well. We've never looked at them at all, and this is new that we're even going to look at them, so every 2 years probably is enough work for town staff rather than every year.
I like those changes.
And then on the other one, and the other thing I just played with is they weren't numbered 1.0, they were in different fonts, they were in different indentations, and now they all look the same.
Would you do me the, I'm being forensic here. Biannually means twice a year.
Or it means every other year.
Biennially means every other year.
We have it spelled wrong then?
Yes.
Can you tell me how to spell it?
I flunked every spelling bee I ever took.
I thought this meant either one.
No.
Biennially? Why don't you just say every 2
I
years?
think it means either the way it's spelled this way.
No.
I just say every 2 years, make it easy.
Biennially means twice a year.
Well, our intent is to have it every 2 years.
so just write
whatever
in
that
twice a
language-
year.
Whatever that language is.
No, every 2
yeah.
years, not twice a year.
Or every 2 years, whatever.
Okay.
It's the clearer
We'll
way
fix
to
that.
do it.
We'll fix that.
Yeah.
And the other one, the only change was to switch it from annually to every other year, whatever,
Investment policy?
however you say that. And that's it. So I make a motion that we approve both policies as
With the
amended.
amendments? Second.
All those in favor?
Aye.
Any
Do
opposed?
you have anything?
Thank you,
Yay.
Barb,
All right,
for
so
doing
those
that.
policies. In essence of time, we'll table the others, but think about them and hand back your comments. So we're going to try to move those along the following meeting, and
On open space, I've gotten comments from just one, but I've also provided those over to, like, just really quickly, give you a quick update. I just want to let you know, I've asked town staff to explore possible other options for maintaining trail maintenance through Connecticut trails, et cetera. So we're expecting a memo back from town staff.
okay. And board rules, Jeff and Moira have some board rules for us to review. Please look at them and
Did we
comment
get
on
them?
those.
Yes, they're the,
Okay. Okay, motion to adjourn?
Second.
Second. All those in favor?
Aye.
Opposed? We're adjourned.